Hi, Ben Exler here, CIO and founder of Spruce Capital Management with an exciting new report on our website. The company's Perion network, ticker PERI, on the Tel Aviv and NASDAQ stock exchange. Now, buyer beware here. This company has a history of business model pivots, unsustainable performance, and ultimate disappointment. Now, they had a turnaround. They brought in a CEO who claimed to be an operational guru and master of strategy, but he has a dark history. He was involved with a company called ESC Medical Systems, named Lumenis, that was investigated by the SEC, a complete disaster, and 2 executives were later charged with fraud. Now look at their metrics. They're reporting revenue and EBITDA per employee that puts them on par with the best tech giants in the world. And even if you think these numbers are true, it's not sustainable. We believe that advertising technology, the barriers to entry are very limited, and that ultimately this company has very limited competitive advantage or moat. In fact, they're highly dependent on a partnership with Microsoft. That's 35% of revenue. But guess who their VP of partnerships is and who we believe maintains that relationship? An executive who came from Blucora, and that company, a short seller alleged, had major improprieties. He later resigned 6 months after that report, but ultimately it looks like he was terminated. Now look at what the insiders are doing. They're consistently selling stock. They're now down to less than 1%, and the CFO was selling stock heavily last week. Now, we think there's evidence of fracture in the relationship with Microsoft. They also formed a partnership with Yandex, and Yandex has been under pressure. And if you look carefully, they just removed Yandex from their website. Now, there are very limited search partners that they can have to juice their results. And we think the results are clearly on the way down. Cash flow imploded last quarter, revenue per search declined, and we're not optimistic that any of this is going to be improved. Now, look what the company asked shareholders to do last week. Authorize 20 million new shares. Why would they do this? They claim to have over 400 million of cash on the balance sheet and cash flow. Now we see 25 to 40% downside risk here. So buyer beware, follow management. It's time to sell.